Maybe it's better to keep money in the bank?
Is it possible to determine minimal risk?
How much risk is involved in buying stocks?
How much risk is involved in investing in 10-year bonds?
How do you lower risk while investing in securities?
Hello, my name is Michael Bazilinsky and I am a financial advisor. Today we will be talking about how to minimize risk while investing in different types of securities.
How do you discuss risk with an investor?
When it comes to investments, this is one of the most important factors to consider. I spend a lot of time with my clients discussing potential risks with their investments. The least risky investment is short-term money market instrument, and the riskiest investment is in stocks.
What is the risk in bonds?
There are several. There is a credit risk, when the company, for a number of reasons, couldn't pay interest and/or principal upon maturity. There is interest rate risk. If, let's say, you've purchased a bond with a 10-year maturity paying, let's say, 4%, and in a year or so, similar bonds are paying 5%. There is also a risk if the investor would like to sell the bond before maturity. He or she may not be able to get all their money back if interest rates, all other things being equal, are higher at the time of selling. When I make my recommendations about bonds, I always go through explanations of risk involved.
What is the risk in stocks?
The risk in stocks is considerably higher than in bonds. There is a company-specific risk where, due to, for example, lower earnings, the share price could go down. Also, if company for some reason decreases or eliminates the dividend, it will also lead to adverse reaction to share price. Another thing to consider is the market itself. Bull market usually takes most stocks up, and bear market does the opposite. When it comes to stocks, there are so-called blue chip companies with long-term proven record of solid earnings and dividends, and junior companies without it. Blue chips usually fluctuate less than juniors and are suitable for conservative stock portfolio. However, juniors could offer higher upside potential under right circumstances. Good examples of blue chip companies are well-known banks such as CIBC and Royal Bank in Canada, Bank of America and Citigroup in the US, and HSBC in UK. Also, major telecommunication companies such as Bell Canada, AT&T, Vodafone are major blue chip companies. I hope that this information is helpful to you. I'm always glad to discuss all your questions over the phone and in person. All the best.